All right, folks, we've got Daniel Martin here from City Traders Imperium. We've just done a massive show for the Trading Up podcast. You can get that with the link below the video, or you might be here on the site watching it. Now, we're going to walk through the trade, which one of the trades that Daniel mentioned in the show. In fact, this is all about the coronavirus and when it hit, and he's trading the FTSE. And we're going to see how this trade unfolded and some of his thinking around his entries, which is probably one of the most unique strategies I've heard on the show in over 250 episodes. So, Daniel, welcome to Trading Nut YouTube. Over to you. Let's hear how this thing works.
All right, thank you. How this works. Let me explain the whole idea behind all this, how I'd actually come up with this strategy to go through. So first things first, if you see this little gap here, compared with the full structure, is actually defined to me that on Friday, the day before, there was a news that actually say that Italy start to go into lockdown. Then on Monday, the first gap we got, this is Sunday, Monday, we have this gap. That was happening across all the indices. As an specialized on the FTSE, I've been trading for so much time, so I decided to actually trade this in short. Then obviously I was waiting until 26. I was not start trading short because I was actually amazed the number of pips start to go down. The percentage is actually quite a lot in no time. Let me make the measures very quickly. It went down to from the time myself to start shorted. It was already 5.7, but it was not about the 5.7. It was the dip of the drop what actually made me a big surprise of. So I just at that point I already got a video on my channel YouTube as well that actually defined that I say that coronavirus, these gaps will not actually stop us to get in short. So a lesson that you need to be aware of that is that when the biggest news away from normal coming in place and you go an entry, just take it. You just take it until direction will not change until all the bigger news coming. So in this case, this is actually coronavirus gap. Yeah. Now, this will never change until coronavirus is over. That is why we'll never be covered this gap. Yeah. That is one of the pains for. But we have even another one that's coming later. Let me show you. So this was my entry at this area. It's my entry to get short. Yeah. And I stop all the way down here based on this gap, on the next gap here. I just decided to, obviously I close my trade. That's just bad for me, but I'm used to close the gap before the weekends. So I closed my trade here. I wish I didn't, but I did. And I took another trade here to short it to this level, particular here. Then after this point, I start to get signals to actually to go long, and I start to go some of the trades to go long and make a small amount of profit. And that's the reason. Now we got this gap very clear there. That actually defined to us that the market is going to be a struggle until this is completed. So this momentum here on the 22nd was 21st, I believe, 12th, sorry. On the 12th, it was the biggest drop consecutive in a single day since the history, 1985.
Jeez.
Because from the FTSE, I took the whole thing. So this is actually the moment I make 44%.
Right.
So from there to there, because I add
was that a separate entry, or was that from that prior entry?
It was an accumulation of trades after. So first I have single entries, here and then. Let me make a note. It was here as well. Yeah. And on the 22nd, on the 12th, about after the announcement, about in the morning, 10, 11, somewhere here. Let me see exactly where. On the day before was 11 and open. I start to close it down. Yes. So on that moment, I start to open non-stop positions, pretty much all the way non-stop until very simple moment, until the US market will open. So when the market opened, the market already moved 10 digits, so already 10% down. And there was another 2% drop down after that. And I closed about 2:30 in the evening on that day, which actually created for me 44% profit on my account. So obviously after that, I got a break. I need to have a break because I have to understand what I have done in one single day. I don't do that every day. Obviously, it's not happened every day since 1985, so it's quite a difficult one. But
Can you explain the sort of reasoning around why you felt that it was about to turn around and go long?
the main reason I start to actually to thinking that start to go long is a very specific pattern that I use for the is actually DEMA. In this case, if you actually highlight it on top, you see it's DEMA 200.
Can you just zoom in a bit?
Yes, let's do that. So if you see, I use a combination of two. Yeah, you see the DEMA in red. Let me see again. DEMA 200.
Yeah.
Yeah, so at this time, it was the first instant I started to go above that level. Yeah. The first momentum is start to actually to design. We may have to actually to go long. This point here, it was very simple because the news coming up as well. And they say they're going to have to 2 trillion from the US in the market and so on. Yeah. So this come up. But obviously it's not good enough. I have to wait. You need to actually to have a confirmation until you see this point here, this drop. Yeah, and then you got the first resistance on this level there. Yeah, that's actually the first time it's actually the market designed to say we may have to go long. Yeah. Then you got this actually, I got this entry and I have to close it at this level because we can't come in. So pretty much I didn't make money in here. I close half of my trade, I open another, and I leave the other trade to close down. I close my trade here pretty much. I think I make a lost it, so I didn't make any money there. Yeah. Then I move into the next one. After the gap, it will go another low. But in this particular moment, if you actually see this level here, it's based off very historical levels on the daily. We go daily. So if I actually can give you the exactly levels of that, it's actually, you see this here. So the first time 2010, the first time they actually trade after 2009, 2010, it was at resistance levels indicated in this area. Yeah.
Yeah.
That's when the market make the decisions. Okay, we're gonna go long. So we are okay. We actually recover from the 2008. That was the reasons. So that's actually the confirmation. On this confirmation, if you actually take, I use Fibonacci levels for this, and you indicate this particular level there. If I make lines, indicate for you the stop loss there. And we're going to take the 9% Fibonacci levels to indicate for you to go along. And it's there. Now we're going to go back to the charts, to the levels. And you see, just a perfect entry.
Yeah.
So then it's actually, for me, it was not an entry. I didn't actually see that. Because I always analyze the daily and weekly. I'd actually went to go to this point of conclusion. This is actually, if this gap is being covered, it will be long. So let's go back to the 1 hour. And we go to 1 hour, and that was my entry. Then you go one exit here. Well, I go 1, 2 exits, and I continue on, and I'll go another entry now here. I expected to go to this level. But already make this an accumulation of this point now. Let me get that off. So I just expected to go to this level. For me, an indication that the market it changed direction will be actually this level here. That was the first time, and it will be about 6,000. It was the first time actually the market decided that maybe it want to go long. Yeah. So this will be an indication that will go for the gap. At the moment, there is nothing to say that. Yeah, it's not that clear that the market will continue about this level. So probably we'll try once, go back again and play around all this area for a period of time. So I will say all this here is going to start for a while. Yeah. So we see how it works now. By the moment we just got, if you analyze the structure, you got this momentum is the drop, want to make the money. We actually make the decisions to stop moving. Now we go one step up. Doesn't mean we're going to continue up. Maybe we go back to these levels and work out to see if we want to go lower again. As it happened before in 2010, 2009, 2010, they create one level first. The first instant was this one. Now, if you go back to the daily on the 2009, and I'll show you back that in Zoom in this area. And if you see, always I use historical data to understand what happened. So this was the year was that 2010, and then you go 2011. So if you see, it took almost a year to actually to go back to the level. Maybe because this market is more accelerated, it happened faster. but we need to have a second confirmation that actually the market will hold and they will continue up. So back to the hour. Let's see, zoom up in the area. Let's delete these ones, yeah, and that one. So that's the plan so far. Yeah, pretty much is how I traded. I continue to trade, but now with less risk, as I make 44% here. I'm okay.
Cool.
I'll take it easy now.
Well, look, brilliant. Thank you very much for walking us through that. And guys, if you're wondering, how people have been making money in this coronavirus drop, then this is a great video to go back and check out. Now, before we finish up, what's the best way for the traders to find out more about you, Daniel?
The best thing to contact me is to actually go to our website, citytradersimperium.com, and just send a message to info@citytradersimperium, say that you want to talk to me, and that's fine. I will contact you as soon as I have a gap.
Cool. Now, look, guys, remember there is a full interview that we did just before shooting this, and there's a link down below the video here. Check it out. It's fantastic stuff. You're going to learn way more than what you've just learned today. So, guys, recommend going and checking that interview out and signing up to the podcast while you're there. All right. Thank you, Daniel. Have a great day.
Thank you very much.
And I'll see you guys all in the next show.